You think you know Bitcoin, but do you? Today, I'm going to be breaking down the simplest explanation of Bitcoin on all of YouTube, and yet it's still going to be comprehensive. By the end of this short video, you're going to be able to understand what Bitcoin is, why it exists, and what the future may look like for the flagship cryptocurrency. Love when they say that. And at the very end of this video, I'm going to drop some hard truth Bitcoin investors or prospective investors must absolutely hear if they want to make smart investment decisions in the world of crypto. Welcome to Ben Armstrong Crypto, the home of Ben Armstrong Crypto and you. And today we're going to begin our series on coin reviews. These are going to be very comprehensive. Of course, going to start with the first most successful crypto, Bitcoin. In these three-part series, we're going to be moving along CoinMarketCap and CoinGecko to give you an explainer video, a ranking video, and a price prediction video for basically every coin. I believe you guys are going to really enjoy this format. And if that sounds good, make sure to go ahead and subscribe to the channel and turn the bell on for notifications so you never miss one of these videos. Hey, and while you're at it, make sure to smash that like button. Number one thing you can do to help out crypto. So let's start out with some very basic information you need to know. Bitcoin is the number one cryptocurrency and the oldest cryptocurrency built on blockchain. There were other digital currencies before Bitcoin, but a working and functioning blockchain is what really separated Bitcoin from all predecessors. The reason why Bitcoin is referred to as the number one cryptocurrency is because it has the most money invested into it over the entire crypto market. The current overall market cap of Bitcoin is over $700 million, which is nearly 3 times its nearest competitor, Ethereum. About 92% of the Bitcoin supply is already circulating. Fun fact, many analysts agree that likely 4 to 5 million out of the 19.55 million Bitcoin are lost forever for a variety of reasons. Now let's take a look at the tokenomics with Bitcoin, which are very interesting. And of course, tokenomics is the study of the supply, demand, distribution, and valuation of cryptocurrencies. The supply of Bitcoin is the thing that separates it from our money, or fiat currency in the United States and beyond. Because you see, it is limited. Bitcoin is limited in its cap. You can't just make as much as you want or as many as you want. Because you see, the supply is limited. You can't just print as much as you want, like the United States government and fiat currency. So let's take a look at another thing the government cares about, crypto mining. And we're going to talk about it a little more in depth later, but Bitcoin miners are simply solving what is essentially a code to be able to unlock Bitcoin to bring them into the circulating supply. The amount of Bitcoin that miners bring in is dependent upon the amount of the block rewards. A block reward is how much Bitcoin a miner gets for mining a block of transactions. And about every 4 years, those block rewards get cut in half during something we call the Bitcoin halving. In 2009, Bitcoin began getting mined by its creator, the pseudonymous Satoshi Nakamoto, earning rewards at 50 BTC per block. The first 4 years of Bitcoin's existence, the rewards were set at 50. And now, as we head into the 2024 halving, we are about to see that number go down, already to 3.125%. Now, one cool thing I recently discovered is that the block rewards are equal to the percent of the supply that gets brought in during that cycle. For instance, during the first cycle from 2009 to 2012, miners earned 50 Bitcoin per block, and over the entire cycle, 50% of the supply, or 10,500,000 Bitcoin, were brought in. So from 2024 to 2027, we will see 3.125 BTC rewards per block, and over the 4-year cycle, 3.125% of the supply will be brought in. Understanding the halving is honestly the key to Bitcoin, though. The halving perpetuates what we call the 4-year cycle based around the halving. The last halving was in May of 2020, and the next one will probably be in early April of 2024. It's not exactly 4 years, but 210,000 blocks, which is usually spanning about 4 years, but really closer to 3 years, 11 months or so. But so far in the history of Bitcoin, what has made this crypto game predictable is that the market movements over 4 years continually mimic each other. Following the halving event, Bitcoin goes up parabolically for about a year and a half, then it plummets off a cliff for 1 year, then slowly rebounds and moves mostly sideways for a year and a half. I like to say that the supply and demand economics are built into the code of Bitcoin. And I say that because of the halving. Cutting the incoming supply in half every 4 years is so dramatic, it's hard to see that event ever not causing some kind of supply shock. This is the main thing people miss. However, right now as we speak, could be seeing the beginning of the divergence from traditional Bitcoin cycles, as the Bitcoin spot ETF hype has caused our cycle to seem to begin before the halving. More on the ETF later. Additionally, if you're interested in learning more about crypto, maybe you're new, make sure to check out my book, Catching Up to Crypto. We got a QR code on the screen. It's 4.9 out of 5 stars on Amazon with a lot of sales. Hope you guys enjoy that book. If you're interested in getting in crypto, I think you will. One thing we're going to do in these explainer videos, though, is look back on the price history of the coins. Well, with Bitcoin, it's kind of hard to do because there wasn't really a price associated with Bitcoin until 2010, and really nowhere tracked Bitcoin prices until 2011. The Coinbase chart, for instance, only goes back to 2015. But here's a lifetime chart for Bitcoin, the closest thing I can get, and you can see it's quite dramatic. In fact, some say the gains from the beginning of Bitcoin are so high they're impossible to calculate. The earliest estimated price for Bitcoin is 4 BTC per penny. Wow. So those are all the numbers for Bitcoin. Let's dive deeper in some other areas. If you're unfamiliar with the pseudonymous creator of Bitcoin, Satoshi Nakamoto, well, basically so is everyone else. Now, I do believe I know who created Bitcoin. It's not a person I've ever mentioned on this channel as who I definitely think it is because I don't want to dox him. But I came across some information that makes me almost certain I know who it is. And the truth is, though, no one actually knows for sure other than Satoshi himself or herself. The most popular theory, of course, is that the creator is actually a group of people called the cypherpunks that were part of something called the Bitcoin mailing list. And that includes many different well-known people in the space, including the deceased Hal Finney, Julian Assange, Nig Szabo, Timothy May, Adam Back, Wei Dai, and many more. There have been conspiracies ranging from the CIA to aliens creating Bitcoin. But one of the biggest controversies in crypto is the question of whether or not Satoshi is dead, and that question matters. It's important because he has somewhere between 600,000 to 1 million Bitcoin. That million Bitcoin is part of the 4 to 5 million Bitcoin that supposedly has been lost forever. We don't know for sure whether Satoshi will ever return to move his BTC. I think most likely not, even though my belief is he is alive and he will not ever move his Bitcoin for philosophical reasons. And also, by the way, I know he don't want that smoke because he would instantly be the most hunted man alive. As far as we know, Satoshi, or the Satoshis in the case of the cypherpunks, were the only team members for Bitcoin. Bitcoin is developed by volunteer developers. However, most of the development in some way is linked back to a company called Blockstream and their employees, and it's ran by Adam Back. Yes, the same Adam Back from the cypherpunks. There are a lot of politics in the world of Bitcoin development that the average person doesn't care about, but more on that later. The Bitcoin white paper was launched on Halloween of 2008, and the network debuted on January 3rd of 2009, with Satoshi mining the first block. And as mentioned earlier, Bitcoin mining plays a role. You see, the consensus mechanism for Bitcoin is proof of work, which is better known as Bitcoin mining. The consensus mechanism is a fancy way to say the way the network agrees on transactions. You can kind of think of Bitcoin mining like a game where the point is to guess what string of numbers and letters is behind a locked door. When you are able to correctly guess the code, the door unlocks and you win the prize inside the door. And this prize is a Bitcoin block reward. And of course, when the code is arrived at, this also means a batch of Bitcoin transactions grouped together in what we call a block, invalidated and pushed through on the network. Bitcoin mining, of course, has come under quite a lot of fire from environmentalists who say it's bad for the environment. It's no more harmful than the city of Las Vegas or washers and dryers. And those are factual comparisons, by the way, not random things I pulled out of the air. Proof of work has been under attack for a while, but the truth is it will be extremely difficult to ever get consensus on the network to make that change. The Bitcoin blockchain can and does change. Look at recent upgrades, including SegWit and Taproot. These upgrades are generally just technical changes that the average Bitcoin user won't feel. SegWit, for instance, or segregated witness, debuted a new kind of Bitcoin address started with a BC1. And there's actually 4 different types of Bitcoin addresses, but you'll mostly only run into SegWit and Taproot addresses at this point. The other 2 are called Legacy and Compatibility and start with a 1 or a 3. There have also been several controversies surrounding Bitcoin, including the infamous Silk Road. And this is where Bitcoin was traded on the dark web for illegal goods like drugs. 2013, founder of Silk Road, Russ Ulbricht, was found guilty of charges related to the site's creation, and right now he is doing back-to-back life sentences for creating a website. That's right, for creating a website. Chuck Schumer chose to make an example out of him to send a message to people in crypto. It's important to note the Silk Road put Bitcoin on the map, and we've been paying for this ever since. This is why people like Elizabeth Warren continue to connect crypto to illegal activities like drug dealing, human trafficking, and terrorism. However, over time, the amount of illegal activity in crypto is much less than 1% of all transactions, and yet we still deal with this narrative that crypto is only for criminals. Asinine, ASA 10, ASA 11. Of course, all the negativity around crypto in general has led to tons of government criticism. However, Bitcoin is loosely regulated as a commodity thanks to Mr. ETHgate himself, William Hinman of the SEC, formerly of the SEC. Back in 2019, he declared on behalf of the SEC that neither Bitcoin nor Ethereum were securities. It was a big moment. Bitcoin's actually positioned pretty well regulation-wise. The greater crypto industry is more concerned about regulation than Bitcoin supporters for the most part. Of course, outside of the recently regulated cryptocurrency, the leader of the pack, XRP. Thanks, SEC. Thanks, Gary. The Bitcoin community is currently divided between Bitcoin maximalists and normal people. Bitcoin maximalists, specifically what we call hardline maximalists, only believe Bitcoin will survive and all other coins will die, which is honestly a dumb thing to think in today's crypto environment. It's a reach at best. It's stupidity at worst. Most of the Bitcoin community is pretty cool, and now Bitcoiners are getting into things like ordinals, aka Bitcoin's version of NFTs and on-chain features that are coming to BTC to make it more like a layer 1 than what it is. We've heard about this for years, but it finally seems like it's starting to happen. Now, one of the extremely interesting things about Bitcoin is that the utility has completely changed since its inception. The Bitcoin white paper subtitle is Bitcoin, a peer-to-peer electronic cash system. Originally, the intent was for Bitcoin to be a digital currency. Some have dubbed it the currency of the internet. But something interesting happened somewhere along the way, which is people realizing that the number one value of Bitcoin is that it goes up in value, so it doesn't make sense to spend it. Thus, making Bitcoin's original use case a weaker argument than the new digital gold utility. Bitcoin has become much more similar to gold than it has to a national world currency at this point. In fact, many people believe it will eventually pass gold's approximate $10 trillion market cap, which would put Bitcoin above $500,000. Now let's talk about using Bitcoin. It's actually pretty easy, relatively speaking, to other currencies, in my opinion. Not so much in the early days, though. As someone who was buying Bitcoin all the way back in 2012, I can tell you it used to be very difficult to use for those of us non-techie people. To send or receive Bitcoin, a user now simply needs to use a wallet or exchange, provide the recipient's wallet address. A small transaction fee will be taken out of the total amount sent, which, as discussed earlier, allows miners the incentive to push transactions through the network. Now, speaking of pushing transactions through the blockchain, the way to push transactions through led to the biggest disagreement in the history of Bitcoin to basically split the project into two versions. Bitcoin Core, which is the original Bitcoin, just what we call Bitcoin, and the newer Bitcoin Cash. There were other forks after Bitcoin Cash, but they're not important. Bitcoin Cash was a hard fork from Bitcoin blockchain, which basically means the code changed and now there's two separate codes. The fight was over the size of the blocks of Bitcoin. Bitcoin Cash supporters believed the blocks on the network needed to be bigger to keep the network functioning at high speeds. The smaller blocks means there are more blocks that have to be pushed through, taking up precious miner attention. Bigger blocks would allow more transactions per block and less blocks overall. But let's be clear, Bitcoin Cash is not Bitcoin. They are separate projects. Bitcoin Cash, though, has had a pretty good year, but we're going to cover that one down the road in a BCH explainer video. Now, Bitcoin has been through a lot over the years, but as always withheld the test of time. No lie, the biggest Bitcoin exchange ever, proportionally, was completely hacked and drained in 2014. 90% of all Bitcoin transactions ran through that exchange, which is of course Mt. Gox. Fun fact, it was actually a Magic the Gathering card game website before the founder, Jed McCaleb, turned it into a Bitcoin trading site. The point is, Bitcoin is resilient, withstanding exchange hacks, a community split hard fork, integration with dark web transactions, China crypto bans, environmental concerns, getting blasted by the media, and much, much more. Fast forward to today, and it's very clear Bitcoin is booming. Right now, of course, we're all waiting for the SEC's approval of the first Bitcoin spot ETF. We already have some futures ETFs, or exchange-traded funds, but these are settled with dollars. A spot ETF is settled in Bitcoin, providing much more incentive for actual Bitcoin ownership. In fact, the argument can be made any institutional vehicle for crypto investing that is settled in dollars is very bad, because it defeats the purpose of a limited supply, one of, if not the, greatest feature of Bitcoin. It creates paper Bitcoins, which are essentially Bitcoin IOUs that have an uncapped supply. However, the new spot ETF for Bitcoin should surely pump the market because real Bitcoin will be trading hands via institutions, which means a lot of Bitcoin. The ETF and the halving are the dominant storylines for Bitcoin right now, but what are the narratives of the future? One day, we're going to cover the Bitcoin ecosystem more in depth, but just know Bitcoin does seem to be changing in a sense, and of course, Bitcoin doesn't intrinsically change, but people can change what they do with it, how they use it, and what they integrate with it, which is why we're seeing ordinals and on-chain additions popping up left and right. But I really believe that one of the biggest narratives we're going to see in the future with Bitcoin adoption is when nation states begin embracing it. This will occur slowly at first, but then rapidly. Right now, El Salvador is probably the leader of the Bitcoin adoption by example movement. But we need more countries to see Bitcoin's value as a currency. And my personal opinion is that over the next 20 to 50 years, we're going to see Bitcoin replace fiat currency as the world reserve currency. Most likely backing other currencies similarly to how gold used to back, I don't know, the dollar. Speaking of gold, another real possibility for Bitcoin in the next few years is that it could pass gold's market cap. After all, Bitcoin is a superior asset to gold in almost every way, if not every way. Bitcoin was designed to be gold on steroids with no roid rage. Another narrative to watch with Bitcoin is how far corporations and institutions are willing to go to stockpile Bitcoin's mostly illiquid supply. I'll have to save that for another video though. And I personally have a sneaky suspicion Ethereum will pass Bitcoin in market cap in the next 2 years. If that does happen, then it'll be very interesting to see how Bitcoin will respond to being tested, because so far it really has never been challenged. Overall though, the future of Bitcoin is bright, but that doesn't mean it's right for everyone to invest in. Of course, I'm not a financial advisor, but I did self-custody some Bitcoin last night. So that was a Holiday Inn Express joke, guys. Told that to Cassie, she didn't get it. Long story. But the type of people who should invest in Bitcoin are probably those who already have a decent amount of money, at least 5 figures to invest. Bitcoin is expensive, and right now it costs almost $40,000 to get one. And the market cap is already huge at over $500 billion. So it's going to be harder for Bitcoin's price to double or triple than projects with smaller market caps. It's just more money. So if you're looking to turn $10,000 into $1 million, Bitcoin probably won't be your best bet. Bitcoin is kind of for old people. Well, old people in crypto. The newer generation of crypto investor wants meme coins, gaming coins, low price coins, and other nonsensical things. Gaming coins aren't necessarily nonsensical, but a lot of the things they're into are. Bitcoin used to be the only way people enter crypto, but that's not the case anymore. And frankly, there are more exciting projects and coins out there than Bitcoin. However, there is some safety in being boring. It means less risk than those coins much further down CoinGecko's list, which is why another group of people who may want to invest in Bitcoin over other cryptos would be people who are risk averse, which sounds funny since crypto is so risky in so many ways, but the Bitcoin investor is generally more conservative than altcoin investors. So there you have it. That's Bitcoin in a nutshell. I'm not even going to make that joke. On our next video in this series, we're going to be presenting my new crypto ranking system, and we're going to be giving Bitcoin a score of 1 to 100, so you definitely don't want to miss that, and then all the projects to come after. That's all I got. Be blessed. Been out.